Hello, this is Bear from Wave. How's it going? Here's a weekly update on the US stock market. Today we're going to take a look at the Nasdaq, the S&P, we'll take a look at the Dow, and then I'll show you a few interesting stocks that we have and a few interesting setups on US stocks. One of them, you can already tell, is going to be Exxon Mobil, and we'll see what I believe is a very interesting setup that is indeed forming on ticker symbol XOM. So, to be honest, I haven't really had much time to take a look at the indices, so I'll do it together with you today. I do know that we kept on moving higher, and we hit on the Nasdaq 18,000 and on the S&P 5,000, so that's pretty strong numbers, and we did get so far a small pullback, and we'll try to analyze that and see what's going to happen. Now, before we do so, let me take a second to just throw it out there. As always, we have the Discord, it's brand new. You'll find people sharing, talking about stocks, indices, cryptos, as well as in general, everything oriented to the Elliott Wave Analysis. So if you want to join, it's completely free. You'll find me there, and you can see there's other people as well, just having a good time and sharing analysis. So the Nasdaq. Now, I said this in every Nasdaq video. I know that some people have this. They don't have it as a 1-2, but they have this as part of a complex correction, and they do have the bottom here. Now, possible, arguably unlikely. However, what I wanted to show you is, and let's just do it live. If we take a look at the, XLK, so the technology sector, and maybe on the daily, yes, we take a look at the daily on the XLK, which again, if you're not familiar, it's the ETF by SPR on technology, which is very similar to the Nasdaq. Obviously, you cannot trade the Nasdaq, but you can trade the XLK. Here, I think it's much clearer that this looks like a 1-2. Again, a leading diagonal, same as I have it on the Nasdaq, but it looks like a 1-2, not part of the correction that came before that. So, that being said, take a look at the Nasdaq. We have a same count, same thing, same story. Now, many of you might wonder what's going on here. So, I did have a couple of scenarios available. One of them, which isn't validated now, was that we had wave 5 here, and we had a 1, 2, 3, 4. Now, if wave 5 is here completed, the problem with that is that wave 5 is longer than 3, and 3 is shorter than 1. That makes wave 3 the shortest, and that's obviously a main wave count validation, main breach of the Elliott rules. So, what could happen? Well, what could happen is, let's see if I have it here somewhere. Yes, either this, which I did call an extended fifth, so we just keep, basically it's forecasting for their upside, and again, major target is going to be 20,000. So either 1, 2, 3, 4, 5, topping wave 3, down for 4, up for 5. So that's a possibility that I see here. 1, 2, 3, nice 5-wave move here. Maybe we do get a pullback with today's session upside, and at that point we again, this would mean that wave 3 is shorter than 1, therefore 5 must be shorter than 3. So that's a possibility. Another possibility is that we have, wave 1 in here, 2 in here, and then 3, 4, and now we are making some sort of an ending diagonal. So mainly because this is wave 5, we should be, we have to be aware, and we should always remember this could turn into some sort of a anti-diagonal. So at this point, we could also start to get an overlapping structure, which wouldn't be surprising considering how much we've extended. So either we keep on moving higher in an impulsive manner, or else we do keep on moving higher, but in overlapping structure. And that would be a motive wave, which motive and impulsive does not mean the same thing in Elliott wave terms. Just for instance, a diagonal is a motive structure, but it's not impulsive. So that being said, that's basically the way I see it. And it would fit because an ending diagonal, the substructure of an ending diagonal is a series of 3, 3, 3, 3. So it's 3 and 3. So 5, 3. It's a series of ABCs. And here, labeling it this way, you could also say it's 1, 2, 3. The problem with this is that it does not overlap, but we could still do this. So that's still possible. We can still fall back lower. So, I mean, it's complicated because of that's the nature of a diagonal. It's kind of hard to forecast, but at least I think it's due to just keep in mind it is a possibility. Now, taking a look at the S&P. Actually, let's take a look at the Dow first. So I'm pretty bullish on industrials, and it is confirmed by the XLI. I'm pretty bullish on it. I do see this as a wave 1 and 2. I don't label this as a wave 1 because I see it as a 3-wave move of some sort. I don't see 5 waves in here. I just don't. And so 3-wave move. So in here, we see quality of -3 against -1 at 39,000 now. The way I see it, and I could be extremely bullish. You could argue that wave 1 and 2, 3, 4, and 5. So to me, there is a possibility, and it's not low, that we have wave 1, diagonal wave 1, A, B, C, and now we resume higher. So obviously wave count validation for this would be here. Let me just label it in red. Oops, sorry. That's in red. And confirmation would be obviously a break of what is actually all-time high. So I'm pretty bullish on industrial. I do see a rotation out of tech in favor of industrials. And I guess we're gonna have to see. But I mean, the only other way I see it is this being a wave, I don't know, 1, 2, 3, 4, and 5. But you would have a short 5, and then that would top wave 3. But then you wouldn't have really that much room for a wave 4. But I mean, if that happens and you do have equality of 3 against 1, then you could expect it to extend to 5th. So that's possible. But again, as I like to say, one wave at a time. Obviously, I will update not members, but I will update Discord members on the Discord. So that's why I always recommend you guys join in every video, as well as I like to spam myself. Sorry, not sorry. But it's completely free. I don't sell anything, so that itself should be a green flag. But enough us talking about me. Let's talk about the S&P. So on the S&P, which I talked about last video, same count, 1, 2, 3, 4, 5. And in a way, it is very similar to the Nasdaq, with the only difference that we can see here a 5-wave move. So let's see if we do pull back. We could have also a sharp wave 4. I wouldn't rule that out. We'll have to see. But nonetheless, either if that doesn't turn out to be a sharp 4, another pullback, and then at that point, a continuation higher. And I mean, it looks like we could be near a major top, unless we just keep extending higher. So this is not wave 3, but it's wave 1 of this wave 3, and that would take us just crazy higher, which I don't know. between two accounts, I like to always choose the most conservative one, so that if I'm wrong, then I at least I've chosen the most conservative one. But I mean, if that happens, we do top here, which is possible. Then if this is not something major, but just a one, and then we get a wave two, then we could enter maybe to the second half of 2024. That could start a major rally, major bull market. But that's a problem for the future. Now, as always, let me know in the comments what you, if you have any questions on the accounts or anything. And take a look at Exxon Mobil. Now, one thing I wanted to point out is, so first of all, what I think is very important, let's go on the daily. So I'm very bullish on energy. I do see this as 1, 2, 3. Now, forgive me for the mess. Okay, so 3, and then, yeah, sometimes I have to be honest, I don't really like how TradingView sets things. So TradingView, if you're watching, which I doubt, if you want to just make it better, I would highly appreciate so. Anyways, before I get sued, a 1, 2, sharp 2, sideways wave 4, which started November of 2022, so over a year ago. So it looks like it's quite about time. You could argue that, I mean, this started, so 2021, February 2021, unfortunately, I think was it February 2021? Oh God. I think it might have been 2022. Now, forgive me. Okay, so it's, as I said, I don't like to edit things, so, and I like it to make it real. So I don't remember it was February 2021 or 2022 that, unfortunately, we started the conflict between Russia and Ukraine, and that, if you remember, brought the prices of commodities, of energies, so oil and gas, up, especially. That was mainly reflected onto European countries when it came directly onto the consumer. Now, that also helped the rally here. Now, on Exxon, and you could trade the short term, you could trade the longer term. So we broke all-time highs here. That was 2014 all-time highs. And we've been sitting on those all-time highs, which were $100. $100 is a strong number, psychological level so far, and many other reasons. It's a strong number. It will attract large orders. So we've been sitting on top of that for a year, and we've been ranging, as you can tell yourself, between 120 and 100. And now, that's when it comes and it gets really interesting. If I bring up volume and I zoom out, you can see how during this whole correction up until here, we were moving on lower volume. If you compare to this was the rally supported by volume. This here was not supported by volume, but look at what happened towards the end of that. Here, we started to increase volume. So that's a sign people are buying there. So that's a bullish sign. And that's why if I go on the intraday, and again, it's even more clear here on the intraday. If you look at it, you have less noise. You see how towards the end of this, just volume ramped up. So that's pretty bullish to me. Anyways, here now, let's say I'm completely wrong, which is possible, and let's say I'm completely wrong, and this is a wave 1. So even if it's a wave 1 for the shorter term, if you have 5 ways up, now you move down, you need another 5-wave move to the upside. So even if it's a wave 1 and now we're crashing, possible, you still need another move higher. So for the shorter term, you would need a move higher. That's the way Elliott Wave rules works. And that being said, if we zoom even closer, what we did is we broke these highs, reacted, and now I see an anti-diagonal. 1, 2, 3, 4, 5. We touched equality of C against A, as you can see here. And if we bring momentum, we are starting to have divergence. So that's just give you an idea of what I look for. And of course, it's just using Elliott Wave as well as technical analysis, so on and so forth. It's taken a lot of boxes, which doesn't mean go out and buy it, because as always, this is not financial advice. I'm just saying that we do have a lot of data, a lot of things in favor of upside, of at least one more leg higher. Now, is it going to happen? I have no idea. If I did, I wouldn't be here. So hope you guys appreciate that I don't know, because I'm here. And I'm sure you love me. Anyways, jokes apart, just wanted to point out all these things that we have here. And it'll be interesting to see how it evolves. Hopefully next week we'll see it up here. But for now, all I can say is thanks for watching. As always, let me know in the comments if there's anything you would any comments on the accounts, anything you don't particularly like, or if you thought about any other alternative account that I haven't thought about. And again, thanks for watching. I'll see you in the next one.